Hello, today is Wednesday, 19th of December, and welcome to this latest XTB market alert. Today I want to speak about two potentially major events we have happening later on today and the impact they could have on these markets. So if we go to the calendar tab here on the XStation 5 platform, you can see at 3:30 we've got the weekly crude oil stocks. You can see this inventory data is expected to show a drop of 2.5 million barrels in the last week for the US. Against the previous reading of minus 1.2 million. Now we've seen some major declines in the oil price with Brent, which is oil on XStation, falling to its lowest level in over a year yesterday, and this could have a big impact on the market. After that we have probably a more widely followed event with the Fed rate decision. This is the final rate decision of the year at 7 o'clock, where they expected once more to increase the base rate by 25 basis points. We also get the economic projections, which include the dot plot, and then half an hour later we have the press conference with Chair Powell. So turning our attention to the chart, as you can see here, I've got an oil daily chart. You can see yesterday we broke down lower once more, following on from Monday's declines, which Monday saw possibly breaking out of this triangle consolidation, and yesterday a break below potentially key support at 57.80. Now we are below 57.80. This could be seen as resistance to the upside, and below here you can see maybe 55 or 53 are levels to a downside, but if this does get going once more, we could even see sub $50 a barrel. These declines are around 35% drop from that high of 86.70, and as you'd expect after such a large decline, pretty much whichever way you look at it, the market's in a downtrend. You can see I've got 200 SMA on here, this yellow line. You can see the price breakdown below it just over a month ago, and you can see this is now starting to roll over and also point down. As well as Brent, we've also got oil.WTI. You can see yesterday we took out lows at 49.40 and we extended down once more. Just when you're looking at markets like this after a large decline, a relative strength index, RSI, can give you some idea of how oversold the market is, and perhaps surprisingly we're still only around that 30 level, which is seen by some as the border of entering into oversold territory. So it's probably because we had several weeks of consolidation, and you can see that oversold conditions unwound somewhat, but we have now dropped down lower. Obviously if you look at shorter time frames, such as say H4, you can see we are in oversold territory and below that 30 level. Now returning to the daily chart, after such a large decline, we've seen similar drop of around a third here in WTI. There is a temptation to try and call a bottom. Whilst we are trending down lower, anyone looking for a bounce may use fib retracement. So if you take the fib from the highs and run it to the recent lows, you can see around that 46 level. If this 46 level holds, then we could get some sort of recovery going forward with the 23.6 around 53.29 first area to the upside. Obviously if we do take out the latest low, you'd have to keep redrawing these fibs lower and lower as the market continues to make new lows. So turning our attention to the Fed, I'll begin with US stocks here. You can see the US 500 here on a daily chart, and the market has dropped significantly since the last Fed meeting in November, and perhaps more importantly since the Fed meeting before that on the 26th of September. Now that was the last what I'd call a live meeting, where they have the dot plot and also the press conference with Powell, and you can see back then at the end of September the market was just a few days after making its all-time high of 29.46, and since then we've seen pretty large drop to the downside. Now yesterday we retested this 25.29, 25.30 area, which coincides with a bottom from back in February, and we have seen a bounce from here, so this is now potentially key support to watch going forward. Finally, you can see in gold here, there is some expectations that whilst the market thinks there will be a hike of 25 basis points, given a probability of around 2/3, 67% when I last checked, there is some idea that possibly the dots will be dropped significantly on the dot plot, and that would be seen as potentially dovish. If this is dovish, that could be bad news for the US dollar, but positive for gold. And you can see there is some expectation here in gold in the recent sessions. The last couple of days we've pushed back up to the highest since the summer, really, around 12.51. And if we do break above here to the upside on the back of a dovish move in the Fed, then we could see move up to 12.65 and possibly higher going forward. In terms of support, this 12.34 is a potentially key area to keep an eye on. Okay, so thanks for listening and best of luck if you're trading over these events today.